Good afternoon and welcome back everyone to Moneycontrol live stream. You're watching the closing bell. I'm Santosh Nair. Well, there's no let up in the selling pressure and benchmark indices have ended in the red for the 8th consecutive session, something that has not happened in almost 4 years now. Mid-cap shares, however, were the only bright spot in the market with the NSE mid-cap index managing to close on a positive note. We saw a fair bit of buying interest in largely in autos, public sector banks and realty shares, which managed to hold ground in a weak market. The India Volatility Index was up by about 0.7% to 13.94. In the Nifty, the prominent gainers were Adani Enterprises, Adani Ports, Asian Paints, Britannia and Power Grid, while among the prominent losers we had Cipla, Hindalco, ONGC, Dr. Reddy's and UPL. And here are some of the stocks that were in the limelight this afternoon, starting with Vedanta. Vedanta was among the prominent losers today, the stock falling by a little over 5%. Now, there is some nervousness in the market about the company's fundraising plans. There was about some chatter about whether the parent Vedanta Resources would default on its bond. Now, Vedanta Resources has to repay about $900 million worth of debt maturing till about June this year, and also it has to repay close to about $1.5 billion worth of debt between September this year and January of next year. Now, the company has issued a clarification. It has said that it's comfortably placed to repay the debt maturing up to April and also in the first quarter of this year. That amounts to close to about $900 million worth of debt. Now, the things would not have come to this level. Actually, Vedanta had planned to buy out, to get its arm Hindustan Zinc to buy out its international zinc assets for about close to $3 billion. However, that has hit a roadblock with the government now being opposed to the transfer of cash from Hindustan Zinc to Vedanta Resources. Among the other prominent stocks in the limelight today, we had Lemon Tree Hotels. The stock was up by 4% in a weak market. Brokerage house ICICI Securities came out with a report saying that overall average room rents continue to show a strong trend in January as well. And now across the country, the average room rates, or ARR as they are known, were about 16% higher than pre-COVID levels. Also, ICICI Securities says that demand is likely to be strong both for February and March on the back of the wedding season and also strong inbound foreign travel. ICICI Securities has said that demand supply dynamics are in favor of high room rates sustaining, and that's because demand is growing at almost 10% annually, whereas the addition of rooms is expected to happen at about 5 to 6% compounded at a compounded annual growth rate. Now, hotel stocks had a fairly good run till about December last year, but since then they have been under pressure. The overall market appears to be divided on the sector at this point in time. There are some who are bullish on the stock, who feel that because purely on demand supply basis the average room rates can hold, but at the same time there are others who feel that hotels may have actually outpriced themselves, and this could lead to demand falling off in the quarters to come. Blue Star shares managed to hold ground in a weak market today. The company's CEO was on CNBC TV 18 today and said that demand is strong across all segments. Blue Star is expecting a 30% growth in summer sales year on year. Overall, the Weather Bureau has predicted that this time the summer might be a little harsh and also is likely to come in earlier than expected, and that is expected to boost demand for air conditioners. Blue Star is targeting 8,000 crore of revenue in FY23. Crompton Greaves consumer electrical shares were also steady in a fairly subdued market today. Overall, the stock has risen close to about 10% over the last 1 month. Now, however, Crompton Greaves shares have been struggling for a while now. Nomura is among the few brokerages which have a bullish view on the stock. According to Nomura, the company is ramping up activity at its R&D unit, which it had set up in 2019. Also, significant R&D efforts are going across all segments. Nomura feels that clearly the efforts of this R&D will be reflected in the years to come as products start rolling out. In the near term, however, the margins are likely to be impacted due to the price cut in pumps as well as high marketing expenses. Nomura has a price target of 377 rupees for Crompton Greaves Consumer Electricals and feels that the company will deliver above industry average revenue growth over the next few years. That's all that we have in this episode of Closing Bell. Thank you for watching, and we'll be back with you again at 9 a.m. tomorrow.